All right, everyone. Today we sit here, Monday. Market just opened, and market opened high despite coronavirus fears increasing and the Chinese markets plummeting. But I'll probably address that in a separate video. Today I just wanted to talk about Tesla specifically as it races past the $700 price mark, and we're up about 12% for the day so far. It's only a couple hours after market open, so the stock can continue to move up, and it looks like it's going to continue to move up for the rest of the day, maybe. Seemingly on not much news Tesla-wise from the company. No new products launched, no new investor meeting, nothing really going on. And this is a bigger move than when they reported the above the expected earnings. So this is when they reported earnings, and we had about a 10% jump. And now we sit here today and we have another big jump. So, yeah, very, very interesting. I'm going to go through a couple reasons why I think this is and why investors are continuing to flood this stock. And for us long-term investors, we knew this was going to happen, right? But I don't think any of us predicted it would happen so quickly. In the summer, $180 for the stock, right? And now we're sitting at 730, which is just nuts. But anyways, I'll go through the main reasons why the stock is up, in my opinion, and what investors, maybe some new material that investors are considering that they hadn't seen before. Okay, so the first item we're going to look at is ARK Invest's new 5-year price target for Tesla, or I guess it would be 4-year price target now. They announced a 2024 price target for it, and you can find this off the ARK Invest website under the research tab. They post, if you don't know ARK Invest, definitely check it out. They're investment management company that focuses on disruptive technologies. So if you're thinking about a company that's disrupting the auto industry, Tesla is the one, right? With electric vehicles, autonomous, and all the bull cases for Tesla that we've discussed in the past. And they released their new price target for 2024. So this came out over the weekend by Tasha Keeney, who's ARK analyst, talks a lot about Tesla. Same with Sam Corris and Brett Winton. So I'm not going to read the whole thing because it is a bit lengthy, but I'll try to cover the main topics. Okay, I'll start by highlighting ARK's expected value case and the 2024 price target of $7,000. And this is their expected value based on sets of probabilities that we'll see below in a bit. Let's start with expected value, $7,000, 2024 price target. Their bear case of $1,500. And they say there's a 25% probability that Tesla could be worth $1,500 per share or less in 2024. And their bull case is set at $15,000, which is insane. And they believe that there's a 25% probability for that as well. So 25, and I guess the bulk of their probability is within the 7,000-ish range. And here they sort of explain how these probabilities look on this chart based on the likelihood. But okay, what's really important is how they actually get to this. So they've established 3 key metrics that are going to be gross margins on the per vehicle basis, I'd say, or per product basis. Capital efficiency, which at the moment is how efficient can they deploy capital for factories and how much they spend per unit, so per unit capacity, and autonomous capability. So here they have high ends and low ends. And basically their high end is just that they're able to deliver in every way, shape, and form. So gross margins, Wright's law is something that ARK Invest specifically uses to justify most of their price targets. They use Wright's law. Okay, so here is ARK Invest's model using Wright's law for the Model 3 cost decline curve. The black line is what Wright's law would predict the cost to produce Model 3 would be based on the units produced. And the purple dots are obviously the actual data points. So we can see that over time, starting from 2017, 2018, 2019, now in 2020, along with the Model 3, Chinese Model 3, we're following Wright's law to the dot, basically. Very well predicted. And they extrapolate this over to 2024, and that's how they get to that lowering cost to produce the Model 3. Okay, now for capital efficiency, they're predicting $11,000 per unit capacity, and they say it's $4,000 worse than the industry expectation for electric vehicles, and roughly equivalent to the Tesla Shanghai factory. So whatever Tesla's doing at Giga Shanghai is their high end for capital efficiency. So that's assuming that Tesla's not going to improve based on what they're doing in China, which is, at least in my opinion, very unlikely, right? We assume that Tesla will improve on their capital efficiency to what they're doing today in 2020, especially if we're talking 2024. And their autonomous capability is that Tesla will launch their autonomous driving sort of robotaxi business in 2021. They'll charge $2.50 per mile, and they'll take 50% as a platform fee, right? And they have a likelihood of 30% on this one. To me, 2021, having this robotaxi network fully operational is a stretch. I would say 2022, 2023, that's when we can start talking about having that network running. 2021, in my opinion, seems a bit of a stretch. And I guess to them too, because their likelihood is 30%. And that's their high end, right? Now, talking low end, let's go back to gross margins. On their low end, margins are in line with premium automaker that owns its distribution and service centers and will stabilize at 25%. So this is something that many people don't know, but actual margins for OEM automakers are terrible. Most car makers don't make money off the actual cars they're selling. They make the bulk of their profits off the service and the dealerships and just that recurring service. They want you to come back to the dealership and spend more money on getting service on your vehicle. And they don't actually make that much money off the per unit sell, which is very interesting. Now, capital efficiency on the low end, they're saying $16,000 per unit capacity, which is $2,000 worse than the industry average. And we went back to comparing it to the Tesla Shanghai. This is way worse than that. So they're assuming Tesla would go backwards in capital efficiency to where there are, at least in Shanghai today. And finally, they say that Tesla will fail to create a fully autonomous car. 70% likelihood of that for their low end. And then what they do with these three key metrics is they put it in sort of a probability matrix where they have all these different scenarios. So the golden goose, the autonomous builder, autonomous car company, and so on and so forth. I'm not going to go through all of them, but they sort of say from meeting all three metrics, from meeting all of them to their high end, and then to failing all of them. Well, this one's actually the 1% chance that Tesla goes bankrupt, and this is the 1% chance that Tesla can't raise more money. So their actual low end is somewhere around here, $7.50 and $1,000, which is still above the current price today. And we can see that if Tesla hits the golden goose scenario, if Tesla delivers on every single metric on their high end, we can see a price target of $22,000 for 2024, which is ridiculous, right? I'd say we're more going to be in this 3,000-ish, 5,000-ish range for 2024. ARK thinks they're going to reach 7,000, and ARK is one of the bullish people, analysts on Tesla, and they've been great source of information if you want to actually learn what's under the hood. Most of Wall Street doesn't understand Tesla as a company. They don't understand Tesla as a business model. They keep comparing it to a traditional car manufacturer. They don't understand the software side of it, you know. But ARK does, and ARK's done a great job with it. Okay, so that's it with the ARK Invest piece. Check it out for sure. Read through it. There's some interesting insights that the authors present, right? And I want to move on to something a bit different, but very related to Tesla. And this is going to be Panasonic. So Panasonic is works hand in hand with Tesla in the supply of their batteries, and they're partners, and they've been partners for a while. Panasonic is up today 3.5% on their quarterly earnings report. And in this report, we'll see the headline here. They post first quarterly profit in the US battery business with Tesla. So before this sort of time period, Panasonic was posting losses on their battery production with Tesla specifically. And that has now shifted to profitability, which is very good, and again reiterates the business model for Tesla. And the main reason they state this is because of volume. So higher production volume pushes down material costs and erases losses. And this has been the case, and this has been the bull case for forever, is once you get volume, in manufacturing of electric vehicles, the costs are actually going to be lower than the cost would be for your traditional internal combustion engine car. And that goes back to Wright's law that we were seeing with ARK Invest. And this is something that Elon has said multiple times, especially when Tesla was about to go bankrupt with Model 3. He described it as a sort of a chicken and egg problem, where to be cash flow positive and to be profitable, they need volume. But to get to volume, they needed to be cash flow positive. They needed money, right? And that's why people said, oh, Tesla's just burning through cash. And yeah, but it was necessary. They had to get all that investment going to push volume. And when they hit volume, profits start running in. And that's why we get a blowout quarter in Q4. So that's going to be my piece on it. Let's look at Tesla stock right now. 731, pretty much the same as when we started this video. Q1, things to look at Q1 for Tesla, definitely going to be a difficult quarter. I would expect the stock price to go down a bit in Q1, unless they beat expectations from Q1, which I think there's a low probability of that happening. But if they do, then it's it. Tesla is gonna continue going up and up. So very happy with the investment, very, very happy with how Elon's executed, and the whole Tesla team. They've been extraordinary in terms of their execution. And what I try to tell people all the time is, if you don't understand the company, just go drive the car. It's free. Just schedule a test drive and check it out, because that's what I think the bears on Tesla and all the short sellers, they don't understand the product. If you put one of them in a Tesla and they'll actually drive it, they'll understand what's going on. And Elon's invited them to tour the factory and to understand what Tesla's doing, but they don't seem to understand. So if they choose to lose billions of dollars, it's really all on them at this point. There's not much us Tesla bulls can do. So I was editing the video, just cutting some clips, and stock is now 750 basic from the 730ish range. It's crazy how the stock moves up $97 in one day, not even a full trading day. But I hope you guys enjoyed the video, and I'll keep posting more frequent content on not just Tesla stocks, but other stocks in the innovative space and disruptive technologies. I hope you guys enjoyed it. Peace.